Hi, it's Spencer here, and today I'm going to talk about one of the most powerful chart reversal patterns, which is the head and shoulders pattern. Now, this is such a powerful pattern that you can even see it in nature, right? If you look at the mountain range, sometimes you'll be able to spot the head and shoulders pattern. So in this video, I'm going to share you some of the key characteristics and the psychology behind the pattern, as well as some of the mistakes that new traders tend to make. And lastly, I will talk about 3 trading strategies which you can use to profit from this chart pattern, and also some powerful tricks, right, that professionals use to trade this pattern. Now, in my previous videos, I talked about the 2 different classes of patterns: reversal patterns and continuation patterns. And in the previous video, I talked about the first one, which was the double top and double bottom. And today we are going to talk about these two, which is the head and shoulders and inverted head and shoulders pattern. Okay, so this is how the pattern looks like. You can see that for the head and shoulders, it is a bearish reversal pattern, right? So what happens is it starts up here, and then the price goes down, right? It goes up again, down, right, and then comes down, right? So you can see that it's kind of like it's a bearish pattern because it starts off high, right, and then it reverses the uptrend. Whereas for the inverted head and shoulders, right, it is the other way around, right? It starts on the downtrend and it reverses the trend upwards. Okay, so this is how the head and shoulders pattern, right, looks like. Okay, so interesting tip, right? The shoulders tend to be roughly the same height. Okay, so on the chart, right, this is how the pattern looks like. You can see that the chart, right, it starts off, this is an uptrend, right, and then here it forms your first shoulder, right, and then when the price comes down, right, and then it goes up, it forms the head, right, and then it comes back down. Okay, so down here, this is a bit of a the pattern is not always so nice, right? So this could actually have been the first shoulder, right? It's possible that this is the first shoulder, right? And then this is an additional pullback, right? So because usually the shoulders tend to be around the same height, right? So this label should actually be for this, right? And then it reverses, right, downwards. So this is the bearish reversal pattern, right? This is the inverted head and shoulders, right? So it's the other way around. It reverses a downtrend to an uptrend, right? So prices come down, it forms the first shoulder, right? Goes lower, forms the head, right? Comes here, forms the shoulder, right? And then price goes up, right? So this is the general shape, right, of the 2 patterns that you should be looking for, right? The head and shoulders reverses, changes the trend from uptrend to a downtrend, whereas the inverted head and shoulders changes the trend from a downtrend to an uptrend. Okay, so what is the psychology behind this pattern? Okay, so normally in an uptrend, prices make higher highs and higher lows, right? Whereas in a downtrend, prices make lower highs and lower lows. Okay, but so one of the easiest way to tell when a trend is changing, right, is to see when the sequence changes, right? So instead of making higher lows, you will start to see prices make lower highs, right, and lower lows, right? So for example, the price will start, right, instead of making new highs, it starts to make lower highs and lower lows, right? That's how you know that the price has changed, right? And for a downtrend, right, the price start making higher highs and higher lows. That's when you know it has changed, right? So what we spot here is the head and shoulders, right? And here we'll try to spot the inverted head and shoulders, right? So that is how, that is the reason why this is a powerful reversal pattern, because it changes, right, the sequence of higher low and lower high, lower high, lower low. Okay, so if you want to compare it with the double top and double bottom pattern, right? difference is that in the double top, right, both prices actually managed to reach the same height, right? And in a double bottom also, right, the prices managed to reach the same lows, right? As opposed to a double top, so as opposed to a head and shoulders, right? You can see that the second peak is actually already, right, lower than the original peak, right? So that is why the head and shoulders, right, is actually a more powerful reversal pattern compared to the double top, right? Because it shows that the price is actually is even weaker, right? It's unable to actually push all the way to the top before reversing downwards. Okay, so what are some of the common mistakes, right, that traders make when they try to trade this pattern? Okay, so first they assume that the trend, they assume too early that the trend has reversed, because reversals don't happen very often, right? Trend can last a very, very long time. So chances are, if you spot the reversal pattern, it needs to be a very good reversal pattern, right? It needs to be big enough to reverse the trend. So if the trend has been very long, right, and the trend is usually in the late stage, right, the pattern has to be large enough to reverse the trend. Okay, so for example, right, if the trend is like a huge trend, right, and then your pattern, right, is just a small pattern like that, right, it's not going to be powerful enough to reverse, right, the trend, right. What you need is like a huge pattern like this, right, which has higher chance, right, of reversing this trend. Okay, so we look at an example over here. You can see that there is a shoulder, right, there's a head, right, but the shoulder doesn't form, right. That's because this whole pattern is too small, right, compared to this trend, right. If the pattern was a bit bigger, right, the chance of it succeeding, right, would be much higher. Okay, so remember, you need a big enough pattern to reverse the trend, right, and also it's best if you wait for more confirmation. Okay, so what are the trading strategies that you can use to trade this pattern? So there are actually three different strategies, right? The early entry, the pre-break of neckline, and the post-break of the neckline. So I'm going to go through each of these on the same chart. Okay, so the first entry, right, we talk about is the early entry. Okay, so when you spotted the first head of first shoulder over here, right, and then you spot the head over here, right, you can actually kind of preempt where the next shoulder will be, right, using the previous shoulder, right, which is somewhere around this level. So if you want to do an early entry, okay, so this is the sort of higher risk but higher reward entry. You can start to take a trade, right, a short trade over here, and then you just place your stop loss, maybe somewhere above, right, place your stop loss here, right, and then you can take a short trade over here. Okay, so if prices continue to break higher above, right, then chances are the trend will continue going up, right. But the good thing is that if you get an early entry here, the rewards, right, are going to be a way lot, right. So you're only effectively risking this amount, right, but your reward, right, is this whole amount. Okay, so there is a pretty good reward to risk trade, right. So it's an early entry. Now the pre-break or the break entry, right, will be somewhere over here. Okay, so once you see the price has broken through the neckline, right, you can actually take the entry, right, at a point where it breaks, right, and then you just place your stop loss maybe somewhere around here, right. Alternatively, you can wait for the price to have a pullback, right, and then you take the trade, right, you take the short trade somewhere over here, right, so that you can place your stop loss over here, right, and then you will still have a lot more, right, room for the price to move. Okay, so the idea is that by waiting for the price to actually break through the neckline, right, so this black line is actually the neckline. By waiting for price to break through the neckline, you actually increase the chance, the probability of price continuing to go down, right. However, because you are taking the trade slightly later, right, so therefore the reward to risk is going to be slightly less as compared to taking the trade earlier, right. So it's actually a trade-off. So the same reasoning for this trade over here, right, this is the shoulder, right, the head and the shoulder. Okay, so the places that you can consider taking the trade, right? You can actually consider going long, right? Somewhere here, place your stop loss here, right? Or you can wait for the price to break through the neckline, right? You can enter right at the point where it breaks, or you can wait for the pullback, right, to enter over here. Okay, so the idea is really to look for opportunities where the risk is low, right, and the upside is a lot. Okay, so those are the three key strategies that you can use to trade this pattern. Okay, so what are some of the bonus tips? Okay, the first, right, some of these are similar to the double top and double bottom, right? So the first is that you must make sure that the trend is in late stage, because the later the trend is, the higher chance that the trend will come to an end. And you can also use the completed pattern for price target projection. Okay, so the same examples. So this is the height, right, of the from the head, right, all the way to the neckline, right. So one of the common technique, right, is to project, right. So using this same distance, you project it downwards, right. So if this is X, right, this will also be X, right, and that will give you a rough target, right, of where the price can continue to go to, right. So because target is usually quite far, right, so this is actually a very good reward to risk whether you are entering here or here, right, or here, right, the reward to risk is generally quite good. Okay, so same for this, right, you measure over here, right, and you do a projection, right, and it gives you the target. Okay, so this is a very useful projection technique, right, that can give you a price target on where you can take your profits. Okay, so I hope that you have learned a lot from this video, and we have a lot more exciting videos that we publish every week. So do remember to subscribe, right, for our channel, right, and you also check out, right, some of our previous videos, right. We have a lot of different videos coming up, and I'll see you in the next video.